Joined by Bloomberg Tech and industrial policy reporter Maggie Eastland. Jess Menton, our Bloomberg senior equities reporter, is here with us in New York. Maggie, let me turn to you first, and I look at this statement from OpenAI on that incident. A new kind of security incident, unprecedented cyber incident. Talk a bit about what happened here. Explain it to me as best you can. And how unforeseen was this, and how worried should we be about it?
And why has no one watched the historical documentary, The Terminator? Okay, but that's fine.
Enough.
All right, yes. It's a very Skynet moment.
The follow-up question.
Please continue.
Yeah, this does seem a little Skynet, but it's not quite there yet, thankfully. So what happened was OpenAI disclosed that two of its models, both the Soul model, which is the most recent one, and actually a model that hasn't been released at all yet, that's still in development, kind of like got out of the box, so to speak. So they were testing their new model kind of in an air-gapped environment. And they asked the model to do something, to complete a security test. So instead of completing that test in the way they had envisioned, this AI model went a little rogue, and it actually kind of like hacked into the internet, which it wasn't supposed to have access to. And then it went to Hugging Face, which is a platform that a lot of software developers and AI researchers use regularly. So it was trying to pull some things from Hugging Face in order to do the tests that OpenAI had asked it to do. So this is clearly an out-of-the-box situation, though it was responding to a directive. But clearly, the AI models are starting to act in ways that are a bit unpredictable, and according to directions they haven't exactly been given.
I don't
like
sleep
this.
on that innocent-looking emoji logo for Hugging Face.
Here's the other question is some people are saying, yes, they have an obligation to disclose this, but it's a little bit of a show-off as well. It functions a bit as an ad for their AI to say, look, we've built this thing. It's so powerful. Look what we can do. Is there a bit of braggadocio here, or is it mostly just they need to disclose it to tell people what's going on?
Yeah, I think that, the part that maybe is not doesn't get as much attention is that, OpenAI did ask the model to complete the security test, and it was trying to do that when it hacked into Hugging Face. It was just doing it in a way that wasn't really what the company had intended. So I think it's sort of a mixed picture here, right? You could see, models acting and trying to act on the directions they've been given, but just doing it in a way that's not what the user intended. So it's a bit nuanced here, and that's more the concern, at least at this point, rather than a full-blown kind of Skynet situation.
All right, fine.
All right, Jess Menton, all of this happening in the crucible of tech earnings season. So we heard from Alphabet. That company talked about its spend on AI infrastructure. I think if you look at those four major hyperscalers, it's something like $725 billion is what they're forecasted to be spending on this. How did our sense of that, our sense of the level of investment change as a result of what Alphabet reported, and what are we going to learn this week from these other companies?
Well, the playbook has changed for these companies and specifically their stocks. Normally, your stock would be rewarded as a hyperscaler if you're spending more money on capital expenditures related to AI. But then what changed here? Well, a lot of that has to do with the macro. I mean, y'all talk so much about oil prices spiking. Just saw that this past week briefly above $100 for Brent prices. And then also, what does that mean for inflation and the path of rates? Because if these companies want to issue more stock issuance, but then if their stock is falling, that's a problem. So if you have to tap the debt markets, that's even more expensive than what their earnings outlook would have been at the start of this year. So then something has to reprice. But with that said, if you look at overall S&P 500 earning growth for the first half of the year, it's expected to track around 28% based on Bloomberg intelligence data. So for perspective, outside of the bounce backs from COVID or the great financial crisis, that would be the best growth since 2004. So normally you wouldn't see that at this point in the economic cycle. So it's not to say that it's doom and gloom, because earnings growth is one of the key pillars for corporate earnings and obviously how that ties to GDP growth. But now we're supposed to get an update for the first time on second quarter GDP growth at the end of this next week after the Fed meeting. Obviously that's more backward looking, but the Atlanta Fed GDP Now models a little bit below 2%. So what does that mean for corporate earnings in general if these are the stocks that have really powered that growth over the past few years?
I was also reading that, the tech sell-offs look pretty scary, but in the end, it might be a better thing to stabilize parts of the sector. Can you explain to us why that might be true?
Well, the big thing the past few years, and something that's switched recently, is typically if you talked, whatever moniker you want to use for these big tech giants, typically because of the concentration and record concentration they have in the S&P 500 as well as the NASDAQ, you would see it just completely completely bring down a lot of the indexes. But what's interesting, whether it's this past week or in recent weeks, you've seen a divergence between the Mag 7 stocks and see what's happening in chip makers, specifically memory. So of course, Apple's going to be reporting next week after the bell on Thursday. That's a different type of AI spender. It doesn't spend as much money related to AI in the same ways as the other companies. And it's also the best performing stock out of the Mag 7 this year. It's up over 20%. Tesla's the worst, down close to 30%.
I feel like it wasn't the shiny new kid for a while, and now people are going back to it.
But then also it had those issues with price hikes for those devices we have. Mark Gurman of Bloomberg reported about that a month ago. Its stock briefly got hit, but it's not spending the same amount on AI and related to CapEx as these other companies, but it's more unique when it comes to the memory components that's more expensive for it. So you see the counterparts in the chip space, whether it's a Micron, SanDisk, those were the two best performers in the S&P 500 the first half of this year. But noted, since the stocks peaked last month, I mean, those have been hit by double digits and pretty hard. So even though you're seeing the hyperscalers pull back, you're still seeing the overall market, whether it's the S&P 500, still about 2% above its all-time high. So you're seeing a divergence there in the concentration in the market.
Maggie Eastland, we had our moonshot moment in recent days, and that was presaged, of course, by what happened with DeepSeek a while back. Bloomberg reporting now that DeepSeek is pausing this second fundraising round after some comments purportedly made by its chief executive. Explain what's going on here and what this says about the dynamic between the innovation and work that's happening in China vis-a-vis what's happening here in the United States when it comes to AI.
Yeah, so as you said, we're reporting that DeepSeek is delaying their plans for initial public offering a bit. I think bigger picture here, what we're seeing is even though this is delayed, we also saw with the release of Kimi K3, another Chinese model just a few weeks ago, and they're also looking to IPO potentially in the next year, is the Chinese companies are moving kind of at a pace that's similar to the US companies. Obviously, OpenAI and Anthropic also have IPOs upcoming, but actually these Chinese competitors are proving to be a real risk for them just because the AI that they offer is very good and it's also very cheap. So that's been a huge point of debate and kind of sending shockwaves through Washington over the last 2 weeks is just, how good the Chinese competition is, and sort of the question of whether those models were created in a way that was fair. Policymakers here are weighing.
Yeah, speaking of policymakers, I'm also wondering as we see some of these jailbreaks from these systems and people start to talk a little bit more seriously about some AI regulation, what that means for the development as you get more competitive with the Chinese sectors and if these AI companies are concerned about regulations that could, hem where they want to go with this technology.
Yeah, I mean, some technologists have said point blank that this new regulatory framework that the U.S. companies have to follow might be hampering their development and putting the U.S. at disadvantage in the race with China. On the other hand, you have safety advocates who have been saying that we need to be having these tests for a long time. And when you have, AI models kind of like hacking other websites, maybe they have a point. So right now there is some testing that is essentially required. It's nominally voluntary, but we've seen, companies that don't comply be export controlled. So, Sam's going to be here this week in Washington, and he's talking about the next generation of models. No doubt he'll be getting questions about the Hugging Face hack. But also from his perspective, it's going to be important to make the case for, releasing that next wave of models because OpenAI will try to get Washington's blessing for that.
We'll see what the conversation is like around that kind of FINRA-esque regulatory model that's being proposed here. Jess Menton, maybe wrapping up with you. We were talking there about the prospect of IPOs, yes, in China, but there are the prospect of them happening here in the U.S. as well. How does this environment that we're in right now, maybe a little more heightened skepticism about this investment, color the plans that these major companies have for IPOs in this space?
We've already seen some recent ones this past, actually in June, we obviously had the SpaceX IPO, and then there's been smaller ones where you're starting to see those stocks price below, actually after they were already trading below where they initially were supposed to price in that midpoint range. So that's something that's another issue when you think about the growth of the economy, but also Oracle will be reporting next week. And a big thing is the credit default swaps on a 5-year basis. That's trading around multi-year highs. And that, according to Barclays, is more, what does that mean for the AI type of debt fears? So obviously not housed in the Mag 7, but another important key because that's also becoming more expensive for whether it's Amazon as well as Meta. And then Meta's actually, has that $12 billion data center in Texas that needs to be financed soon. So that's going to be another issue when you're thinking about the financing with that. So that's going to be all key of how all that ties together when you're looking at the credit market side of things as well.
I mean, I am starting to hear a bit more people say the quiet part out loud, and that's the word bubble. I mean, what's your take on that? Or is this, as Mark Twain said, the reports of my death have been greatly exaggerated. The reports of a bubble have been greatly exaggerated.
I feel like because of the earnings that have backed up growth, whether you're talking about from a profit perspective, it's very different than the dot-com bubble fears, because Pets.com is always the famous example people want to point to. I mean, these companies have the earnings to back it up. So it's a little bit different than a bubble, but bubbles can go on for years too. But a lot of my sources tend to push back on things like that.